Well, my first guest says that the economy remains resilient and his firm, remains constructive on equities. I'm going to bring in Albion Financial Group, their CIO, Jason Ware. Jason, I'm digging that shirt, my man. To be or not to be, bold. I love it. All right, so listen, I know that you've been focused on earnings growth, and let's just talk about this for a moment. Folks, this goes back to 2021, your quarterly earnings. The light blue bars are what's expected. The blue dot is what's actually happened. And you can see, for the most part, they always beat. But this last quarter, this first quarter here, Street was looking for 12%. We got 27%, and now we're looking for 22%. Jason, what are you thinking?
Yeah, it's good to be with you, Charles. Thanks for having me as always. Look, I think you nailed it. I mean, what's really driving this market is the surprise this year in earnings. I think that's the biggest surprise. Forget the war in the Middle East that is winding down, but the surprise has been the upside strength in corporate earnings. We're talking about 29% year-over-year growth in Q1, probably going to be mid-20s in Q2. And the naysayers will tell you that it's just a handful of companies. Right. It's not. They're not looking at the data. When you control for the biggest contributors, we're still seeing 15 to 20% earnings growth. It's a bull market. So
you just read my mind. Top 10 contributors, earnings growth. And it's in the second quarter, they're saying, hey, you got between Micron and NVIDIA, that's 41% of it right there. You already said, listen, it's going to be across the board. By the way, we do see strength in all the sectors there are. I do want to talk more than about this, because bringing up NVIDIA and some of these other names that are on there, I know you like Mag 7 still. By the way, so do I. I feel like just maybe it might be early. One of the problems has been because they've been spending so much money, their buybacks, these share buybacks, has sort of fallen off a cliff right there. But I really believe soon, and I saw this chart and I want to get your thoughts on it. There's some folks out there saying, yeah, this is where they are now. They're making the investments, but if you're worried about free cash flow, don't. By 2030, it's going to be off the chains. Is this one of the reasons you like it here?
It is. I think you highlighted it perfectly. This is an air pocket in free cash flow because these companies are making critical investments, massive investments in the AI infrastructure that's going to power these businesses over the next many years to come, 5, 10, 15 years down the road. And so we, as investors, we want to see them making these investments. It's important for their future survival. It's important for their future growth. It's important to keep their moats intact. And so you have to look through that and say, okay, so where does free cash flow, how does it look 2 to 3 years down the pike? And I agree with you. I think we're going to see it inflect higher and start to grow again.
So do I. I think it's nuts, the fixation on whether or not, when they get this back or whether or not they're wasting money. I just don't think companies that are smart enough to be this big are going to be, just that frivolous. Right. But be that as it may, you're also bullish on financials. JP Morgan's Citi and Morgan Stanley. Right. They're looking pretty good here. What's the thing, though? What's really the thing that makes you most bullish? Is it the fact that we've got all these IPOs coming out, the investment banking business, or is it a lot of things?
It's a lot of things. We're seeing broad-based strength in U.S. financials, and in those three in particular, if you look at their loan books, they're growing anywhere between 5 to 10%, with Citigroup and JP Morgan being at the high end of that. IPOs, capital markets, secondaries, fixed income, investment banking, wealth management, you name it, these businesses are firing on all cylinders. And I think the secret thing that's happening is happening in the margins. They're using AI increasingly more each month, each quarter, each year, and that's increasing their margins in kind of a stealth way. So we think there's also an expansion in profitability underway in addition to the top line growth.
Now, I know you like the bottlenecks, you're bullish on them. You've mentioned some of these stocks more than once on this show. Yep. And listen, they've done extraordinarily well. What's the time layout for you on these? What's it seems like, considering how often you've mentioned them, you plan on owning these stocks for a while.
Yeah, we've owned them for some time. Cisco is one of the newer collection of the bottleneck stocks in AI. We've owned Amphenol and Quanta for some time. But look, we still think as long as the earnings continue to keep up with the pace of stock price growth, then you can stay with those names. They haven't gotten more expensive. In fact, they've gotten cheaper because earnings growth has been faster than stock price appreciation. So as long as that continues to be the case, right. And Charles, we think these are multi-year bottlenecks that play out. We're sticking with them.
Yeah. And I think the key you said, and everyone needs to focus on this, as long as fundamentals go ahead of the the stock can actually still be cheaper at a higher price. 30 seconds. I want to squeeze this in, Jason, because your Salesforce is a name that you've liked. It hasn't done very well. A lot of people like Salesforce. Right. This is your software versus semiconductors. It's been an unmitigated disaster. At some point, do you say, hey, maybe just some of these names, either they won't survive per se, or they won't have the same sort of the same sort of ability to command the margins like they once did?
No, it's a great question. And I think this is, you had a profiles and courage. I think anyone who's still sticking with software, and we still own Salesforce, probably deserves a mention in profiles and courage. It's been very difficult to own software in the context of AI over the last year or so, but we still think Salesforce has, look at their top line. They're growing top line 12%. It actually accelerated last quarter. Right. Earnings growth was 23% last year. It's going to be mid-teens this year. It's trading at 10 times earnings. So you're going to have to be patient. You're going to have a strong stomach, but we think Salesforce will get through this.
All right, so you're saying in the end you'll make some money and you'll get a Purple Heart. Jason, thank you so much, my friend. Appreciate it. All right.
Yeah, of course.
Hey, listen.